As we're heading into February, we've been seeing some interesting changes in the Toronto real estate market, but has it done anything when it comes to affordability? In this video, let's break down what affordability looked like in 2023 and discuss what we've been seeing in the ground level in the Toronto real estate market here a month into the new year. I'm Michael Ouzas. I'm a realtor here in Toronto, and I help buyers and sellers just like you navigate the Toronto real estate market. If you ever want to book in a call with me, click on that first link in the description down below. To kickstart this year, we saw the Bank of Canada hold their overnight lending rate at 5%. What does this mean for you if you're a buyer? Well, on the variable side, anytime the Bank of Canada decides to hold the rate, that means that the variable rates typically don't move. One of the key things though that we should be paying attention to is the bond rate when it comes to mortgages in Canada. And the reason being is that the bond rate is tied to the fixed rate. And if we take a look at what these bond rates look like, right now we have just crossed around that 3.5% line, which brings us back to where things were back in May of 2023. And I don't know if you were taking a look at pricing in May of 2023, but when the Bank of Canada held rates in January 2023, we saw a 15% spike in pricing from January through May. The Bank of Canada decided then to increase the rate by 0.25% in June, but also on the background, the bond rate started increasing as well, which hit a high here in basically October of over 4%, which is a pretty high number because the fixed rates now started to increase. What happens when both fixed and variable rates go up? Well, inevitably, the affordability power gets less and less, and mortgage rates tend to follow when it comes to when a buyer is looking to purchase a property. As things have started to drop here going along, we're hovering in and around that 3.5% mark. And I do think this is going to be a super important indicator to watch, maybe even more closely than those Bank of Canada announcements as we move forward, because if the bond rate continues to drop, we will see lower and lower fixed rates. Right now we're hearing somewhere in between the 5 to 5.5% range, whereas back in October, we were hearing around 6.5 to 7. On the flip side, if those bond rates start to go up even more, we will see mortgage rates go up higher, which could also pull back affordability and pricing when it comes to real estate. What's interesting to me is that this past week, since the Bank of Canada announcement, where they decided to hold the rates, we have seen a spark when it comes to offers on properties. I've seen anywhere from double digits to as high as 85 offers this week in the city of Toronto. Now, that offer date was actually in Mississauga, which is part of the Greater Toronto area. I totally understand that there's 85 offers and maybe the property was priced low, and it definitely was. However, that being said, there are 84 buyers now that went home without a property that are actively looking in the Toronto real estate market for that next property to come to market. This brings us to our next point, is that a resurgence in the housing market could bring back interest rate hikes. These interest rates are closely tied to inflation, and the Bank of Canada's mandate is to definitely get inflation under control. One of the key factors of this article is one working factor against a prolonged surge in home prices could be the Bank of Canada itself. Central Bank Governor Tiff Macklem said a jump in home prices could induce the bank to renew its interest rate hikes. It'll be really interesting to see how this plays out on whether or not the interest rate increases will spur more activity in the market. And we've definitely been seeing that in the last week or two. And I've seen properties that have been sitting on the market for 30, 40, 50, even 80 to 100 days start to move in today's market. And that could also be an element where the pricing strategy from the seller has adjusted to today's current market, which is definitely different than where things were in May of 2023 and of course 2 years ago in February of 2022. All that to be said, what does that mean from an affordability standpoint if the Bank of Canada decides to hold their rates, if the fixed rates drop and mortgage rates go down, and with the benchmark pricing sitting in and around that $1.1 million mark, which is kind of the average as we've gone through the ebbs and flows since the rate increases. This is coming from ratehub.ca, where it says 2023 marks a terrible year for home affordability. And this is their 2023 year in review affordability report. Here's the Rate Hub chart, and I've done these charts in the past, but it was really great to see a full 2023 outlook. And this discusses the change in income required between January and December of 2023. We're looking at all the major cities across the country. However, let's take Toronto, of course, because that's where I practice real estate. In January 2023, the stress test rate was 7.37 and the mortgage rate was 5.37. So always keep in mind that you do need to get stressed at 2% higher than the mortgage mortgage rate that is available that day. 5.37 was the mortgage rate, stress test 7.37. And I also wanted to note that this is discussing a 20% down payment, 25-year amortization, $4,000 annual property taxes, and $150 of monthly heating. And it's also based on the big five banks' 5-year fixed rates for each month and an average of that. And the Korea MLS Home Price Index. In January 2023, the average household income to purchase a property was $207,000 a year. In February 2023, mortgage rates actually went up to 5.48 from 5.37. Not a huge jump, but still about a 10 or 11% increase. Stress test at 7.48. Average income in Toronto needed is now $4,000 more than in January, $211,100. As prices continue to increase throughout basically the month of May and even into June, check out the difference of the affordabilities. In March 2023, $217,000, April $218,250, and May $222,600. And here's what I found the most interesting is that in May of 2023, with the mortgage rate at just about the same as where things were in January, the average income needed was now $222,600, so about $15,000 a year more on average income than in January 2023. And this is reflective pricing. As mortgage rates started to increase in June and into July on the fixed side especially, that affordability didn't get any better. We even saw a high in July of $235,000 average annual income to purchase the average property in the city of Toronto. And that remained pretty high as we went through October of 2023. Now in November and December, we're still seeing mortgage rates around 6.16 at that time. And they have been dropping since, and we spoke about that a bit earlier in the video. But the average annual income for a property in the city of Toronto up $11,100 from January 2023, reflective here at $218,000. As we're continuing through 2024 and mortgage rates seemingly starting to stabilize, at least on the variable side and possibly even on the fixed side, where we're seeing rates in and around that low 5%. We have seen them come up a little bit since the bond yield did go up in the last couple weeks. So that's something we're going to keep an eye on. As prices continue to rise, or if prices do start to rise, affordability won't necessarily get any better when it comes to properties in the Toronto real estate. The other thing that sucks to say sometimes is that the market is going to market. It doesn't exactly care what any of us think. The market is very reflective on people's sentiment and what people are looking to do, whether it is to buy and or sell real estate. That's what really dictates the market. Seeing that demand come back is definitely reflective of how there seems to be a little more stabilization in rates. Just something to consider as we go through February. The new stats are coming out, and that will tell a bit of more of a story for what we saw in January. However, the last week of January, I think, will be the most important when it comes to that data. I'm Michael Ouzas. Thanks for watching.